Hello team, welcome to my second weekly market outlook where I will be going over my watchlist for the week ahead based on the fundamentals as well as the technicals. So starting off from the brief fundamental outlook, for me Euro is neutral to bearish, and this mainly comes from the deviation from the tightening cycle to now they are at the cautious hold. Because they stated that they are monitoring the second round effects of the energy shock. So that basically means that when oil prices goes up, energy prices goes obviously up as well. But the people, they cannot really afford elevated energy prices. Therefore, they need their employers to pay them more. But the employers don't really take the money out of their own pockets. They are elevating the prices of the products to afford the rising wages. Therefore, it raises the inflation as well. So for now, the inflationary data that came out recently were raised, but they are raised at as expected, meaning that there is not much pressure inflationary wise. It stays around those below the 3%, which is elevated. They want to fight it, but it's not really necessary right now. Whereas the growth kind of caps the upside for the euro. Since the growth came out at 0.4%, yes, it was a big upside for a big bullish surprise, but it's not really strong as well. So until the growth until the growth doesn't confirm a stable economy, I don't see much upside on the euro. And therefore, the growth and the inflation, of course, are the key point to watch for the direction. Um, USD. USD, in my opinion, is bullish. It mainly comes from the Fed attentions to elevated inflation. The inflation is almost at 4%, which is almost double of their target, meaning that this is a big problem for the Fed. The recent data came, the recent inflationary data came out lower than expected, meaning that the inflation is kind of slowing by its own, but it's still cooling too slow to not to act. Therefore, they need to act to bring down the inflation. The growth came out lower than expected though, so it kind of limits the hiking potential for the Fed. However, the growth did not come weak. It came out still strong, lower than expected, but still it is strong, and it leaves the room for further hikes. Also today we had a PMIs which came quite hot, so it also supports the economy. So therefore, yeah, I still see some room for rate hikes. But of course, we need to closely monitor further inflation and path, whether it's dropping harder, for example, or the growth. If the growth continues to disappoint, there we would not really see much room to hike anymore. But until then, I still am leaning more bullish on the dollar. AUD for me is slightly bullish, but it's kind of early to say that it's strongly bullish. Why? Because the inflation is high, very high. It's also at 4%, which is something that the RBA wants to fight. But the confirmed growth is too weak to fight it. So it's kind of the situation that I am afraid with the dollar. But it already happens on AUD. So for me, it was weak, but now we had some leading indicators such as business confidence, consumer confidence that are showing that the growth could be higher. That the people are have trust in AUD's economy. Therefore, I see some bullish tilt for AUD, but we need next growth numbers to confirm really the bullish bias. For Swiss is very simple. The interest rates are at 0%, and the inflation is quite low. It's at around 0. It was around 0.5%. Today it came out even worse. But the SNB already signaled that they need to boost their inflation. They want the inflation to be higher at those 2% target, around the 2%. But they can't really cut rates because they are at 0%. Meaning that, for example, when you borrow the money, you can return less. Therefore, the investors are not trusting the Swiss economy with negative interest rates. So that is causing the Swiss to the SNB to intervene in their currency, being of course bearish for Swiss. CAD for me is neutral to slightly bullish. It's because the BOC already said that their inflation is at the target. The core inflation came out at 2.1%, which is effectively the BOC's target. And they see that the growth is improving. But it's not really confirmed that the growth is strong. It's still at 0%, but recent data showed that the growth could improve over the time. So therefore, I'm neutral for now because we really have a very neutral BOC stance. And so yeah, basically the next growth and inflationary numbers could be the next would be the next driver. Until then, I have no really interest in trading the CAD because it could really go either way. For example, when we see the bullish higher growth numbers, then we can be bullish on the CAD. But if we see the growth still flat at around 0%, therefore we would see some more bearishness coming to the CAD. Of course, CAD is very influenced by the oil prices, so a persistent conflict surrounding them in the Middle East would boost the CAD as well. NZD for now is for me is bullish. It's because yes, they hiked previously, but the confidence in the New Zealand economy remains still strong. So the leading indicators indicating that the growth is not dropping as fast as it could after the rate hike, meaning that there is still a lot of room to fight the inflation. Via rate hikes, whereas on AUD it was not possible really right now. On NZD it's already possible and it's still possible. So until we see the confirmed lower growth by the numbers itself, I am still bullish on NZD. For GBP, I am slightly bullish because the BOE shifts more hawkish with the higher shifted more hawkish with one more person voting for rate hikes, which was 6-3 ratio. Also, they stated that they see higher inflation later this year. So yeah, with the higher, so basically now we need to see the confirmation of that bullish bias via the higher inflationary numbers. So then we can see the actual bullishness coming into the GBP. But yeah, if the inflation would not really show us these bullish intentions, then definitely we can see some downside. But until it's confirmed, I don't have really an interest in trading GBP shorts. I'm leaning more so towards longs. So with that said, let's start from the dollar index. The dollar index is now at a very unpredictable area, for me at least. We are kind of fighting this demand zone with the supply zone. So either the supply zone can push us down lower, or the demand zone can push us up higher. So I don't really have an interest trading dollar index at the moment. What I would be looking for is maybe to see a reaction from the supply zone. Then we can grab some more liquidity because there's no liquidity in that move up. And after that, I would be happy to see some daily order flow break to trade some more longs. Until then, I'm not really favoring any dollar positions. Going over my watch list on AUD Swiss, I like some upside on it. As we can see on the daily time frame, the daily time frame is bullish after grabbing liquidity at the lows. We broke the structure. Now we are in the order flow zone, the bullish order flow zone, so we can potentially trade this weekly high over here. We grabbed also some daily liquidity, and we left behind, and we left also this daily liquidity. On the 4-hour time frame though, I am considering longs already. Matter of fact, I am in long positions because this low is actually strong low because it swept liquidity to the left. And therefore, this could be taken out as a daily bump in the road, but it's not necessary to be taken out since this is already a strong low. We had taken out liquidity to the left, and we saw a early early buyer's swipe, and we now had a strong V-shaped reaction, breaking the high with a candle close, creating this demand zone that we can already look for some further longs. Euro NZD. Euro NZD for me is remains a nice short position. As we can see, the daily time frame, the daily structure is bearish. We came to the extreme liquidity point. From there, we see a lot of momentum down. Now we saw some slow movement up higher, indicating to me that this is not going to mirror this whole move. It's just a slow pullback, and now it got broken, creating this daily supply zone that we can trade some shorts from. On the 4-hour time frame, what do we see? We can see that it just missed to close below this 4-hour swing low, but I still have my bearish bias on the pair. We liquidated this bump in the road. We created some squeezing price action here, swept early sellers, and now we had created a strong supply zone that I would like to short from. Now we grabbed internal liquidity that this already could fuel the move down lower. So I like shorts on this. Euro GBP. Euro GBP, I still do see stronger pound than the euro, therefore I am leaning towards shorts. On the daily time frame, what can we see? We can see that after grabbing this liquidity, basically the momentum is still in towards the downside. So I'm trading pro trend, and after grabbing daily liquidity, we grabbed some daily liquidity at the highs as well. So now it's perfectly possible to me to trade towards daily liquidity at the lows, in line with my fundamental outlook, as well as for example we could trade some early sellers. We can swipe some early sellers as well. Therefore, looking on the 4-hour time frame, I do like to see that after liquidating the highs and this trendline liquidity over here, we swept early buyers with a pip precision, early sellers, excuse me, creating a very nice, very strong high over here. Then we candle closed below the previous order flow low, meaning this is now the supply zone in control. Then we consolidated for a little bit. We creating some more liquidity at the highs. Now the liquidity got swept, so when we see the next break, then I would be very confident in shorting that, at least towards this, at least to trade all the trendline lows here. So this looks good for shorts already. Now Euro USD. So kind of Euro USD is looking the same as the dollar index, where kind of the supply zone is fighting with the demand zone over here on daily time frame. But what we have to keep in mind is that our daily structure is still bearish. We grabbed some liquidity, we tapped a fresh area of supply, we tapped the EMAs, so I would be happy to look for some further shorts. On the 4-hour time frame, we can see that of course 4-hour time frame is also bearish. We grab the extreme liquidity point. That could of course be an entry. This could also be a very nice entry. If you took the entry like that, that's perfectly fine. But what I would be looking right now is maybe we can break the low here, and then we can scale in on some liquidity to trade further shorts. But we can maybe see another breakup higher, creating the ascending channel, where then we can trade a breakout, and this is something that I would be very interested in. We can also see that after this range price action, we swept the high of the range, so we can this is perfectly possible to trade to the low of the range. For USD Swiss, for me it's a little bit difficult to enter right now. I am bullish on USD and bearish on the Swiss. We took out the final liquidity low, and from there we are moving up higher. So maybe we can break this high one more time, create some liquidity, then we can swipe the liquidity, and this could be a potential trade, but the price action is a little bit messy right now. What could also happen is that we can trade a little bit lower towards to trade all of those weak lows out, tapping like this very refined demand zone with a yearly open in it, and then we can trade some more longs. So that's the second scenario for me for USD Swiss. But longs are looking already valid, and it was perfectly possible to just buy it on the liquidity. However, with the news, it was kind of very risky. AUD NZD, very happy to see the bias from the previous outlook play out into absolute perfection. Zero drawdown, very simple liquidation, change of character, breakup, breakdown, supply zone, entry on the retest. Very beautiful scenes over here. So now, after we saw the 4-hour swing structure break, I will be happy to just wait for the pullback towards that 0.5 towards those premium prices, liquidity, and I would be happy to just do the same over and over again, as simple as that. Now the pairs that are not really aligning technically yet, but they are very nice fundamentally, definitely. So this is NZD Swiss. We have a lot of bad lows, so I would be waiting for some big manipulation move, and then we can trade some more longs. This is basically the bias from the previous week because the price like stalled over here. Therefore, I'm still waiting for the same. And on GBP Swiss, I like to see some more manipulation down as well. You can see that we are very rangy right now. Maybe you can see some manipulation down, grab liquidity below this low or this low, and then we can see some nice change to trade some more longs. Yeah, guys, that's it for me. Wish you a fantastic trading week, and see you, of course, next week. Bye.